Hello, everybody, and welcome to another episode of Mortgage Fundamentals Podcast. Today's episode, we're going to be revolving around how you guys can utilize the resources in order to help you guys pay less when it comes to buying a mortgage or getting into a home. Today, my special guest is going to be Paola Escalona once again. I've
Hi.
had the pleasure of working with Paola many times, and she's an amazing agent here in Las Vegas.
Thank
How are
you,
you?
Daniel.
No, thank you, Paola. How are you doing today?
I'm doing fine. Thank you so much for the invitation. I'm very excited for today's episode.
Glad that you were able to make it. You're the first person I'm technically recording with, again, with this new setup, but I really appreciate you doing it.
I
So
love it so far.
thank you. Thank you. So Paula, so we're going to talk about the closing costs, down payment, and all the other costs when it comes to purchasing a home. I understand that a lot of people have like the misconception that purchasing a home costs a lot of money or it's going to break the bank. And part of that is true, right? Because there's a lot involved in purchasing a home, which
Exactly.
is both the closing costs, which is the lending fees and anything with the loan.
Everything involved, the transaction, yes, the different parties, for example,
Mm-hmm.
the title company and is the lending side.
Mm-hmm.
If the brokerage have any other fees, there is a couple of expenses
Mm-hmm.
associated with the process of buying a home.
Yeah.
Yes,
And that's on top of the down payment.
exactly.
So unless you're going like USDA or VA, you still have to put down either 3.5% for FHA or 3 to 5% on conventional, depending on whether this is your first purchase or
Exactly.
not.
And there is cost associated to buy a home. Like there is no such a thing of getting it for free, correct?
Absolutely.
But the different on the amount you need, it vary depend of your situation, depend of the down payment assistance, depend of the program, correct?
Mm-hmm. It's definitely going to be different for each program in terms of what costs come along with it. But that's why we're kind of talking about this today, because we're going to talk about ways we can
Help.
help you with those costs. Because it is
Exactly.
true, like we said, buying a home costs money.
Exactly. It's not free, but you don't need a big amount of
Mm-hmm.
money. Like of course, depend of the house you're gonna purchase, that variate. But if you put it like I don't know, you wanna buy a home of $300,000, it's not that you need $100,000 or $50,000 to purchase a
Mm-hmm.
home, correct?
You
Unless you're planning to
don't
put
need
like
that. Yeah.
exactly depend of the down payment you're gonna do, right?
Yeah. You don't need that, but you can do that. So let's talk about the four topics we're going to cover. We're going to talk about down payment assistance programs.
Yes.
We're going to be talking about seller concessions, or IPCs, also known as interested party concessions. The other one we're going to be talking about is seller credits. Or we talked about that already, right? I said that. So I think
Well,
lender
seller
credits.
credit comes to like
IPC, which
IPC,
is, yeah.
yes.
Lender credits is the other one. I apologize, guys, for that fumble. I think those are actually the three things we need to talk about, right? Those are the three.
Yes, the closing costs and down payments is yeah.
Yeah. And there are a lot of different programs out there. So we'll start off first with the down payment assistance programs.
Okay, let's do it.
So down payment assistance programs are very good at helping clients get into homes, or at least their first home. A lot of them are either national grants, local grants, whether that's county, city, state grants. Some of them are even from nonprofits, right?
Okay,
And some might even come from some individual, somebody's in job as well, right? Because here in Las Vegas, we have the Culinary Union
correct.
that actually offers some form of down payment assistance.
So different organizations have the private down payment assistance kind of, but you
Absolutely.
have to qualify for it.
Yep.
It's not like everybody can.
Absolutely. So those are specifically just for a specific group of people, right? Or people that are involved in that union. So down payment assistance programs are great because most of them do two things, right?
Hmm.
They cover the down payment up to a certain amount, whether that's the whole thing or a part of it, depending on which program you use. And a majority of them allow you to actually use that money towards the down payment and some of your closing costs as well.
Which they are great, right? But
Mm-hmm.
and that's something that I want to touch base with you.
Mm-hmm.
Right now, I just ask you a question before we start recording. That how would you decide which program would be good for individuals? Like
So, depending on the individual, obviously, we're going to have the initial consultation. I'll ask them a bunch of questions. I'll take all their loan documentation. And I normally try to first, I have to know what programs are available, right? So, I try to keep myself educated in terms of what programs are available, how they work, who they're tailored to, what they offer. And then I try to find out what the client qualifies for, right? Some programs are good for any program, so they can work with FHA, VA, USDA, and conventional loans. Some programs only work with specific programs because it's a little bit harder for some of these nonprofits to get qualified with government loans. So sometimes they're only good for maybe conventional loans. And just like we had just mentioned, some people only qualify for specific programs because they work in a specific industry and that specific industry offers that money. So first I'll do the consultation, get all their loan documentation. After that, I will offer them, if there's more than one or two, I'll offer maybe the top two programs that might be available for them,
Mm-hmm.
maybe three, depending on how close they are in range. And then I'll let the client decide on which route would be best for them. Because at the end of the day, that's going to be your decision. You're going to be the one that's going to know what you may be thinking of, how long you're going to keep your home in terms, how long you're going to keep your house for,
Yes.
right? So it could be one of those people that like, okay, I'm only going to be in this house for expecting to stay in it for 3 to 5 years. Maybe this program would be better because it's more of a short-term version of it. Maybe I plan on staying on in this house forever.
For a very
So I
long
might go
time.
with this program because that benefits me.
And the good thing is like you lay down all the information, all the
Mm-hmm.
programs, so the client will decide which one are better for them, and they're gonna make a informed decision of which program they would like to choose. You just not like, okay, here is the program, you go for it.
Yeah,
You're just
absolutely.
gonna give them the information and the options.
Yeah, that is correct. I think no tengo mis zapatos. That is correct. It's one of those things where my job is to get them into a house. My job is to get them the loan they need, but I'm also there to kind of guide them as to what options to pick. Because at the end of the day, I'm not here to make those decisions for you because these are financial decisions you have to make. I can advise you, I
Exactly.
can strongly suggest something and tell you the benefits as to why I feel that way. But again, it is at the end of the day, this is going to be a loan or a decision you make because it is a big financial decision that the buyer has to make for themselves.
Exactly. It's the biggest purchase somebody is gonna do probably in their lifetime.
Absolutely.
So you probably do it.
Right.
It's kind of scary when you put it in that
Yeah.
perspective. Like, oh my God, it's a huge decision, but that's why you wanna, take advice from your professionals, the people that are with you in the process, your realtor, your a lender, because they're gonna guide you to make the best decision possible.
That is correct. I think that's something we've talked on before. It's we're here to guide you. We're here to help you with your needs. Same thing with you guys. Like I think you can relate me. You can relate the fact that I'm advising them on which loan to take when you're just advising them what house to take. 'Cause at the end of the day,
Exactly.
that's their house to choose, right?
Yes. I
So
always, the best I can do is give them all the information so they can make the best decision, like investment wise, or which one would be the best for their family, or which one would make the best sense, to choose from. But at the end of the day, it's your choice, it's your decision. We only can give you options and lay down all the information, but we cannot make the decision
yeah.
for anybody.
Absolutely. So that's essentially it about down payment assistance programs. So the things you want to look at, well, actually, I can tell you, like when you're looking at a down payment assistance program, you want to take a look at those things, right? You want to take into consideration your personal plans. How much is that program offering? Is it a forgivable loan? Is it a non-forgivable loan? Is it one of those programs that kind of give you interest sharing? I'm going to go into more detail specifically about down payment assistance program in another episode, but it's always a good idea to pay attention to the little nuances about each individual one. Don't just go to a lender and then they just tell you this is how this works, or they tell you this is what it's going to give you and that's it. I personally do tell people that, but I take it a step further and I make sure I tell you guys about, okay, if you use this program, this is going to be a stepping stone for you and you're going to use it to get into the house. But, some of them require you to pay it back, and you need to know that because it's going to be a part of your decision as to when you may have an opportunity to refinance, how much you may need to pay up in principal sooner than later, or how much you may need later when it
Exactly.
comes to refinancing.
And another point, it will be like people, the home is possible is a down payment assistance that most of the people recognize, right? Or they
In
heard of.
Nevada.
There is many others,
Hmm.
correct?
Hmm.
Like it's not just home is possible.
No, so that's one of the things, guys. So again, it's going to be talked about a little bit later episode, but down payment assistance programs. I will tell you guys this. I'll say this much. I try to do my best to learn about every program possible available in the states I am licensed in. But that does not necessarily mean somebody else has not brought it to my attention that certain programs exist. I'll give you one example was when I was helping my brother in California. I didn't know that there was a specific program that certain people qualify for in certain areas. I won't say the programs,
Mhm.
but he enlightened me on that one, right? And in all honesty, that was one of the programs that uh, encouraged me or made me want to start looking up a lot more programs and learning about how each of them work, because there are so many programs in so many different states that a lot of people or a lot of lenders may not know about because they haven't personally went out of their way to do their due diligence. Or again, I'll talk about this in later in more depth, but some of these programs are also a pain in the butt for realist or for lenders to deal with because there's a lot more paperwork involved, or there's an
Correct.
extra layer of processing or underwriting, and it can not only cause more stress for us or more paperwork for us, but like transparency, it could probably force you to have to request a longer closing because of
Okay.
the processes.
It's complex, right?
It's a little bit more complex and adds a little
Hmm.
bit more complexities to the process itself.
And that's another one because some programs they will require more time to close. So then instead of like usually a transaction from beginning to end, it will be 30 days to 35 days, give and take.
Hmm.
But there is other programs that they will require 40 days,
Yeah,
correct?
40 days, some of them 60 days, to be honest with you, depending on how slow or how far along. Like, especially if we're rushing a file, we didn't take the time to, we just got them pre approved right away, didn't get it through underwriting beforehand, and the process takes a little bit longer. Now, for example, that same program that I'm talking about, that one requires them to get the loan, and then they can take up to 2 to 3 weeks to look at it. So it's always a good idea to be more well prepared beforehand.
But another thing it will be and that will help the client decide if depend if you are really that you need the home and closing 1 month or month and a half, then the realtor need to talk to the well, the lender talk to the client of all the options, and if that client um, can qualify for two programs, then the point will be like if this one will require 60 days of closing date and then this one will require 30 days,
Mm-hmm.
and there is not much difference between both of them, then it will be best to go with the one that you can close in 30 days because you're in the rush. So this type of information you need to make together. The lender, the realtor, and the client need to be involved in the same transaction. They need to be on the same page so we can all help to just make sure you're going to go to the deadline on time, correct?
That is correct. And that's why it's like I said at the end of the day, it's there's a lot of decision making when it comes to it. So we want to make sure that we well inform everybody. And you're right too. I think one of the things you did touch on right there is that it's not just me informing the client about how they work,
Mm-hmm.
but the real estate agent needs to know.
See,
And then
yes.
also the listing agent might call me and ask me why I need this kind of time.
Exactly. So
So,
everybody need to be on the same page. So that's why
mhm.
important communication and transparency is key on the real estate transaction, because it's not just, oh, I'm gonna go with whatever lender and whatever realtor. No, you need to have this conversation ahead of time. Make sure the person that is guiding you is really giving you all the information you need. Is being transparency is transparent all the information, and answer the phone, like stuff, little things like that will add. And all of that is like a circle. We all need to be
Mhm.
in the same communication, right? In the
Yeah.
same path.
Yeah. So, in a sense, there are a lot of programs. There are going to be different ones that help you cover those costs in different ways. And in short, I guess you would say it's always a good idea to take into consideration what the lender's telling you, but you can always do a little bit of extra research. And if you guys find something different, always bring it up to your lender, because if your lender is there to help you and they know about certain programs, they'll be able to tell you whether or not they exist, whether they have certain drawbacks or anything like that. Like I said, the ones I'm going to offer our clients is always going to be the ones I feel are going to be the best ones. That doesn't necessarily mean all lenders will do that. Some lenders will, to be honest with you, I think some only work with certain ones
Yeah.
and will not work with other ones because of what I had mentioned earlier, because of the paperwork involved or the some of the extended times on
It's
that.
either they don't have the pool of variation of programs,
Hmm.
or they don't have the knowledge.
Yep, because they have to all be approved with each individual program.
It depends
So
of which lending mortgage company you work for,
yeah,
right?
absolutely. And I'm fortunate enough to work with a company that does work with a bunch and is willing to add on new ones. So I try to. There's a running joke in my office where my boss has been calling me the. She tried calling me the king of down payment assistance programs. I told him the prince. I'm not quite there yet, but we want to make sure that we're offering you guys as many options. And this is, I think, in my opinion, one of the most common options and probably the most easiest options you guys are gonna have available to help you guys lower your costs when it comes to purchasing a home, right? So now that we've covered down payment assistance, let's talk a little bit about seller credits and or IPCs, which are exactly the same thing. So seller credits or interested party concessions are essentially just concessions from anyone interested in the loan transaction. Seller credit is normally not something is guaranteed. It will really depend on the market we're
Exactly.
in. But a seller concession is a credit that the seller is offering you as the buyer to help you with your closing costs. Now, the one thing I do want to add about these things is that they cannot, I repeat, they cannot be used towards your down payment in any way because your down payment is technically your minimum contribution. And that's why down payment assistance programs are special because they can actually meet that requirement and they cannot be used to pay down your debt. Okay, so you have to pay your own debt. There are exceptions to that with VA. I'll get into more detail about that whenever I talk about VA loans, but seller concession is something you have to negotiate into it. So, do you want to talk a little bit about how that kind of works in terms of the process?
Yes. For example, currently we have I have a client under contract, and
Mm-hmm.
the sellers, even though right now is sellers market,
Mm-hmm.
we were able to negotiate $15,000 towards the closing cost of my
It's a
client.
lot.
So it's even though there is, because you touch base on depend of the market we are in, but it doesn't matter. I think it's depend of every situation, because some sellers are really interested in selling their property. They're on the rush and they will be willing to negotiate sellers concession. They are willing to, help or contribute um, with the buyer if they need some closing costs. So it's depend of a specific situation. Again, some sellers are not in a hurry. They just want to taste the market, and they're just not going to give you any seller's credit. But there is some of them that, yes, they will.
Yeah, they're willing to help you. One of the things I want to touch about is, like I said, the seller credits are used towards any of your down payment or any of your closing costs, prepaid and non-recurring and recurring costs. I will say that if you want to learn more about what closing costs come in your loan, I do have a video on that. So check out last season episode 4 for more details on what you find on your loan estimate and what some of these closing costs can be. But seller concessions are, in my opinion, like you said, like yes, some buyers or sellers are willing to do it.
Mhm.
Some are absolutely not gonna do it. And it's a great idea for like an agent like yourself. Whenever a buyer's like interested, right? You guys go out of your way. You guys call the agent. You fill them out. And you're like, hey, here's what I'm thinking. What is? Do you guys have any other offers? Yada
Yeah,
yada
we're gonna
yada.
go over exactly the situation and see how we can negotiate for our clients,
Mm-hmm.
correct? Because at the end of the day, that's our job. We have
Absolutely.
to be there for a client. We need to just make sure they're gonna get the best deal possible.
Yeah. And it's kind of weird. I think some people don't understand that, seller concessions can sometimes be a little bit better of a request than a lower purchase price, depending on what your financial situation
Mm-hmm.
is, what the rate market looks like at that point. But I will say that you can use your seller concessions towards your closing costs. Let's just say you have the money for closings and you just want to use some of that money for like a buy down. There are two options when it comes to these buy downs, right? We can do a permanent buy down where we use that money to get you a lower rate, which in turn gets you a better payment, right?
Yep. And
And
they're
we
very popular right now, correct?
Yes, absolutely. So buying down the rate permanently and using seller concessions towards that is really popular. You can usually only do that if you're not using a down payment assistance program because most down payment assistance programs don't have a buy down option. they're usually pretty much just fixed rates for
Hmm.
that specific program. Um,
What I say, I'm sorry to interrupt, it's like
yeah,
nobody's gonna give you anything for free. Like
exactly.
they are giving you, but at the same time they taking something. They're gonna
Yeah.
probably take a higher interest rate or
Hmm.
something, right? Or
Yeah.
maybe you can, it's not pro rate, or
Hmm.
oh, it's only until 5 years, right? There is always this restriction. Oh,
Yeah, so I think what she talked about right there is like the down payment assistance program. Don't think that you're just getting that money for free and you're going to get like the best rate. There's going to be
yes.
some sort of attachment to it, whether it's a higher rate, no option to buy it down and stuff like that. Like we had mentioned earlier, you have to pay it back. But the seller concessions, for the people that don't need that down payment assistance program, I think is a great way for them to kind of pull the lever, right? Okay, if I put this much towards my closing costs and this much towards buying down my rate, what does my payment look like right after that? What does that require me in order to pay towards closing costs? What if I just throw it all towards closing costs? Another way you can use your seller concessions too is, let's just say you're doing FHA, you can use it to pay your upfront mortgage insurance premium.
Mm-hmm.
Um, you could, if you're doing conventional, depending on how much you're putting down already, um, instead of having MI, you may be able to buy out the MI with your seller concessions as well.
Also, the HOA is dues for like a year.
The HOA is due for a year. I think that one's a little bit more complicated, but you can use it towards a
You
bit
could, yeah.
more things. I think one of the, like I said, it has flexibility to it, right? Because there's so
Hmm.
many things involved in closing costs where you're pulling a few little levers here. Okay, and this is one of those reasons why you want to talk to an agent who's willing to, run these numbers with you, run these scenarios with you, in order for you to make that decision. Because it shouldn't just be, cookie cutter thing. Here's, this is done, this is done, and this is done. You know what I mean? There should be, depending on what resources are being given to you or what additional items are being put on the table, you should be trying to figure
Establish.
out
And I
which one's
think,
best for you.
yeah, and I think that's why another way why it's important that the lender and the realtor have a great communication with the clients is because if you are getting some concession, then is where you should put it, like where it makes the best sense,
Mm-hmm.
correct? Buy down the interest rate or prepaying something.
Mm-hmm.
So it's very important to be again in the same page.
Yep. And I think it also goes back to what I spoke on earlier. It's also going to be on like, how long do you plan on living in this house?
Hmm.
At what point do you expect you're going to be doing a refinance? I know right now, it being July 20th when we're recording this, right now a lot of people are expecting rates to go down sometime soon, right? So does it make sense to buy down the rate right now?
Exactly. And also that there is at some point it doesn't make sense to buy so much, right? Because
Mm-hmm.
then it's
Oh yeah.
too high, a lot of money. And if you are planning to live in the house for like 3 or 4 years, it probably won't make the best sense of financial
Yeah.
decision.
It's one of those things, guys. Whenever you guys are buying down the rate, and again, right now we're just talking about general ways to kind of get lower these costs, and we can always go into more detail. Make sure you're doing the math, and if, as the young kids would say, if the math isn't mathing, like, just don't do it, right? But for me, like I say, whenever I'm suggesting things, and again, I'm going to go to very personal, I'm always going to talk about how I do things because this is my podcast and I can talk about things like that. But I will always say, hey, we can buy it down to this amount, and that makes sense to me. But if you go to this point, you're paying this amount of money to save this amount per month. It's going to take you X amount of months to recover that, because buying down the interest rate is you making prepaid interest payments, meaning you're not going to get that back if you refinance within a certain amount of time, meaning there's a potential that you might be just throwing away money,
And
in my
another
opinion.
thing, it will be like make sure they, because, and I talk about my personal experience that happened a couple of years back.
Mm-hmm.
And my clients were receiving like 12,000 towards the closing cost,
Mm-hmm.
and the lender
Mm-hmm.
wasn't sure. It just didn't use the whole amount to buy down the rate, and it was left $6,000 on the table, and we were planning to close in like, okay, we're gonna close tomorrow. It was
Oh
something like
man.
that, like tomorrow in 2 days. And they just messed this $6,000. So I cut it. I said, like, where is the other 6,000? Because I saw in the settlement statement that they were
Mm-hmm.
using only $6,000.
Mm-hmm.
And it was weird to me. I said, okay, hold on. Where is the $6,000 that the seller already provides towards this transaction? And they were like, oh no, because, like, a lot of things happen. And at the end of the day, we have to extend the closing date because we want to use everything that they
Mm-hmm.
use. They bring down the interest rate.
Yeah,
The client at the end of the day save, I think it was $200 extra every month
that's good.
because of that.
Yeah.
So that's why when I talk to my clients, I always make sure, hey, I'm gonna give a few lenders information, because we are required by law to do that.
Mm-hmm.
But I make sure that they know the experience of each lender I recommend. For
Mm-hmm.
example, you have a lot of experience, you get mortgage, the
Mm-hmm.
programs that you use. You just want to make sure the lender will do everything possible to help you towards the
Mm-hmm.
deadline, right?
Mm-hmm.
And to give you all the information and to best guide you.
Mm-hmm.
For example, in this situation I just talked to, the client didn't know anything. They just will, okay, perfect, we bought down their interest rate. That they wasn't aware that they could buy even more with that seller's credit.
Mm-hmm.
So just to give you a little example of what can happen on a transaction, and what could happen if you are not aware of your lender or your realtor are not doing the job.
Yep. So it's always a good idea to pay attention. I think that one's a key one to say. Pay attention to your CDs and loan estimates. The loan estimates, not so much. I personally, or our team normally adds the credits at the end just in case we have to adjust or add a couple of things here and there. But make sure that when you see your closing disclosure, it's really important to make sure that those seller
Yes,
credits that you're getting
are all
are being
using,
fully
yeah.
utilized. Now, to counter that, depending on the program, like if you're using a down payment assistance program, there is a chance that too much credit is too much credit, and sometimes we won't be able to use certain amount.
Because you have a
But
limit,
never would I
correct?
run into a situation, or at least put myself in a situation where I have $6,000 too much credit. That's weird.
And it
Yeah.
was perfectly fine at this. In this specific situation, the listing agent was amazing, and he said, you know what, don't worry.
Mm-hmm.
Sometimes we run through those scenarios. That's, it happens,
Mm-hmm.
and it was okay.
Yeah.
But it could be very dangerous for the buyer if we have to extend out of our due diligence or out of the safe date that we can walk away of a deal. Like,
Yeah.
out of those dates, very dangerous for the buyer.
Yeah.
So we have a very good scenario there that we could manage to use all the the closing costs.
All the closing costs, all the seller
Yes.
credits. I think it's always a good idea to make sure, like I said, we're checking all that stuff.
Hmm.
In this case, and I think for the most part, most listing agents I've worked with tend to be a little bit of understanding about certain things, right? There are going
Yeah.
to be certain situations where they're going to be a little bit more, I won't say uptight, but I will say a little bit more stressed because sometimes there's a simultaneous transaction going on. Maybe they're trying to get their buyer into like a new home, especially when it comes to new homes. Those
Hmm.
deadlines are really strict. If they're moving across country, out of state, and I
But
know
at
this
the
is
end
a
of
little
the
off
day,
topic.
we all want the transaction to finish.
Yeah,
The listing agent also want their client, after you been 20, 30 days under contract, you don't want to tell your client, oh, we're not gonna go move forward with
yeah.
this. We're
So
gonna make everything possible to work it out.
yeah, but I think just make sure you pay attention to those things.
Hmm.
Um, and I think one of the other things I want to talk about with seller concessions and IPCs is like the negotiation part. There are a few little tactics that sometimes can be used. Sometimes maybe a house has been sitting there and you can do a full price offer and ask for seller concessions. Maybe there's markets where you can lower the price and ask for seller concessions. And sometimes you just advise the client saying, hey, they want this amount, we need this amount in seller credits because that's what you need in
In
order
order
to
for
get
you to
into this
close,
home. So let's offer them a little bit more and ask for this amount.
has loaned the house appraised also, like.
Yeah, well, the house has to appraise at the end of the
Exactly.
day because the bank's only going to loan at a
But you
certain
see,
amount.
this is something that you require for the client. You need to come out with certain amount of money for you to close. So
Yeah.
then the agent comes along and he need to run the comparables to make
Mm-hmm.
sure that offer it can't be it can be possible
Yeah.
when the appraisal go and do their.
Yeah, and that's the other thing I wanted to talk about too, is like some of the closing costs that you guys need to pay attention to. Again, is also on episode 4, is your prepaids. Some of the prepaids that you're going to make before you even close the loan that you will likely not get back if you cancel is your inspection report, appraisal. If you're getting into a condo or something like that, a condo cert fee, which comes up extra. If you're doing a manufactured home, there's additional things like the Jesus, I can't even think of the fees, but there are fees with manufactured homes that you have to consider as well, like
Yeah,
the
they're higher.
IBTS tag, making sure that it's been fully converted into real property.
Hmm.
Engineer cert is another one. And those are prepaid costs that cost a little bit more up front. And
And the VA, the termite inspection that
the
is
termite
required.
inspection, and these are very hard to really put into those credits. So take into consideration that you might just be paying for those out of
Exactly.
pocket. So you'll never truly, or most of the time, won't truly pay $0 to get into a home because you still have to pay for these. But as long as you know about these, and also your EMD, because you have to put a deposit down. But as long as you know about these things, you should be well prepared to get into a home and make sure that you're using those other funds in other areas.
Yeah, but also the point is you don't need much to
Mm-hmm.
go into a home. Yes, you will need to save some money because again, there is nothing for free. But you have the down payment assistance, closing costs can be covered by the seller, right? In a
Mm-hmm.
great negotiation, in a great situation. So you might not need, the 20,000, the 30,000, depend of course of the purchase price of the house. But
Mm-hmm. So that's essentially seller credits right there, guys, in a nutshell. So now that we've done down payment assistance and how that helps, now that we've done seller credits, the last one on our list right now is going to be lender credits. Now, this one's not going to be too long because lender credits are a little rare depending on how we do this. So a lender credit normally comes in the form of a rebate on an interest rate, right? So what you will normally do is you will get a lender credit if you take on a higher interest rate. Now, this is depending if you're not using a down payment assistance program. Some down payment assistance programs do have a rate sheet where I can add some lender credits to it, but for the most part, it's going to come from you taking on a higher interest rate and getting some sort of credit to help you with your closing costs as well. You cannot use the lender credits like that towards your down payment either.
mhm.
Another way you can get lender credits, and we've done it here with our company, is we offered a program where we would pay. I think we still offer this program, where we will pay for the one or the last year of a 1.0 buy down or 2.1 temporary buy down. So in other words, we'll get you into this program. Your rate will be this amount for this first year, and then for the rest of the life of the term, this is going to be your interest rate. So there are different ways that, or different programs that some lenders will offer that has to come in the form of a lender credit. Um, but it's not necessarily something you negotiate. It's just something you kind of look at certain programs. Okay, this program offers this amount, this program offers this amount, or this interest rate
Okay.
offers this amount. So it's going to really depend a lot on the interest rate market we're in. Right now, very rare to get a rebate or a lender credit because we're still kind of in a situation where rates are a little bit higher. The mortgage bonds in which mortgages are sold is kind of in a weird spot where they're not offering a lot, and it wouldn't necessarily make sense for you to take like on a, I don't want to say interest rates, a really really high interest rate just to
Exactly.
get a few $100.
Yeah, and that's come. You need to calculate with the client what makes the best
Yeah,
sense.
at that point, if you're a first time homebuyer, I might just recommend you to a down payment assistance program. You know what I mean? Because the interest rate might still be way better.
Mm-hmm.
You know what I mean? So it's very rare that we get some of these. But when you do get one, I mean, if there are programs out there, even sometimes lenders have their own down payment assistance programs that they work with that they have to do them with.
And
So,
that's where a lender need to be very knowledgeable about
mm-hmm,
programs because there is some programs that the interest rate makes sense. It's like, certain percentage and it's lower than this program, but
mm-hmm,
you need to have those knowledge.
mm-hmm. Yeah. So, like I said, if you're a lender, I think a tip, a tip for lenders, if especially if you're newer to the industry, always take some time to in your day, whether that's 1 hour or 2 hours, to learn about different programs and the little nuances, because there's always going to be slight changes, whether that's a guideline change, credit score difference, DTI difference, AMI difference, which is your average median income, income limits. And it's going to be a great service for your clients, because you're giving your clients a disservice by not personally
Yeah.
getting showing some growth in what you know about
And they
certain
always
programs.
changing, correct?
Absolutely.
Yeah.
Absolutely. Down payment assistance programs change, come and go all the time. Some of them are the same program, they just change whether or not they're forgivable or not. Some of them are government based and will be here for a very short period of time because it only has a certain amount of allotted funds. I recently had two programs that were great here in Nevada that offered a good amount of money towards the down payment. I got a good amount of my clients into them, but as soon as you start promoting those and people see them or there's visibility on them, they're gone just as quickly. So when you're doing your research on down payment assistance programs, don't just look for the regular ones and think you've learned everything, because there's constantly new programs coming out.
So that means that the person that talked to a lender a year ago and got qualified for different down payment assistance, it would be wise to go again. Talk to a lender these days, because whatever you got qualified for 1 year or 6 months or 3 months
Mm-hmm.
from now, it might change.
It could change in 2 months. It could change in 3 months. Sometimes the programs, sometimes I'm talking to clients when we're really close to running out of funds on a certain program. I'm like, if we're going to do this, you're going to have to move quick.
And they think it's a selling part, but it's not. It's
No, no,
just
I'm
really,
not, I'm not
like
trying to sell you on
exactly.
anything.
Some people
I,
say, "Oh yeah, right,"
no, no, no,
and
no,
it's
no.
true.
I,
They're running.
I will literally take you to the website and show you, because the website tells you. I will give you an example. I recently closed on a loan maybe 2 months ago. There was a program that was offering $35,000 towards the down payment, right? And I had this client, and I was just like, we're down to the last two. She was still looking for homes. It got down to the last one, and she locked in right on the last one. So we
Wow.
got really, really lucky to get her into that program. It was, in my opinion, it was meant to be. You know what I mean? But you have to make sure. And I was able to go to the website and show the client. I was like, look, it literally says there's only X amount left. So I'm glad that some of these programs actually do that, because the last thing I want to sound like is I'm trying to push you to buy something just to buy something, when I'm not trying
Yeah,
to do that. I'm
exactly.
literally trying to make sure that
A lot of
you
people
get
are
these
skeptical.
funds before they're gone.
Yeah.
Some of them have expiration dates. You know what I mean? Expiration funds, expiration dates. Just hear me out. You know what I mean? I know that it's probably better to get proof in person, or visibility, in order to be certain that the person isn't just trying to push you in anything. But believe me when I tell you guys, like, that's that's not the case.
Yeah,
So,
there people sometimes are skeptical, like, oh yeah, you try to sell me, that's not true, but it is true. There
mm-hmm,
is certain programs that they are running
mm-hmm.
out of money, correct, of
Yeah.
grants, and they just poof disappear.
Yeah,
That's
they
it.
literally just gone, and they're like, what happened to this program?
No anymore.
It's done. You know what I mean? But that doesn't necessarily mean you don't wait or you don't ask about other programs, because I'm always getting myself updated on new programs, and I'll call clients that have recently talked to me, and I'll be like, hey, there's this new program, let's go over it. But all in all, yeah. So that's lender credits. So one of the things I wanted to touch on is, first, down payment assistance programs, right?
Which we did.
We did. Great thing about down payment assistance program is, depending on the program, you can layer them and use more than one at a time, right?
That's also a very good point. A lot
Mm-hmm.
of people think that is they can only use one
Yeah.
down payment assistance.
For that lady that I said with the 35, I also got her another grant that gave her $7,600.
Wow.
And on top of that, I think we had like 6 grand in seller credits. So this lady, or this client, bought a home with nearly $50,000 in free money, and to get into that house. All right. Um, the other thing you can do outside of layering of that is, you can use a down payment assistance program and you can get seller credits,
That
right?
okay. That's good.
So that's the most common thing we've seen,
Yes.
right? I've gotten into people into homes with just them paying their appraisal and their inspection, and then everything else was covered.
Yeah. There's people that just go inside a home with little money. I
Yeah,
see it myself.
yeah. And again, it does cost money to get into a home, But by utilizing these tactics or these resources, you can really get into a home for almost nothing. It happens a lot more often than you guys think it does. And it's a great way for you to get into the motion or get past that fear that you can at least talk to a lender and find out what you guys have available. Because I think the number one fear for most people is I don't have the, well, it's credit is one of them. My
Mhm.
credit sucks, yada, yada, yada. And we'll talk about that in another one. Or I don't have the funds for it. Great. Do you have at least a few $1,000s for EMD? Couple $1,000 maybe at most. You can put the rest like
And
on
we
a
didn't talk
card.
about the gift letter,
Oh, gift funds.
gift funds,
Yeah.
exactly. That you
You,
need a gift letter.
yeah, I need a gift letter for gift funds. Gift funds is another resource. I mean, it's not a free resource in terms of something we're offering as like other interested parties, but you can also
But that's
use.
another option, family
Mm-hmm,
that can help you purchase a home. So
mm-hmm,
there is so many different ways
mm-hmm.
to
Mm.
benefit yourself about.
There's also one more. That would be the some people can get money out of their 401k.
Oh yeah, and I see that happen too.
You know what I mean? It is your funds, but I think, correct me if I'm wrong, everybody, is that some of these actually allow you to take out that money, borrow it, pay it back at no interest, right? So you're basically getting free borrowed money
Hmm.
in order to get into it. You're going to pay yourself back, obviously, and we don't have to count that payment towards your DTI. So that's one of the great benefits of that. But
That's
you
good.
know, you're using with a good lender and a good real estate agent that refers you to the right lender, or if you went out yourself to find a lender like myself in order to help you guys, um, a, a very well educated one and one that's really there to help out is going to be able to give you all these options and let you know what options to take, or at least advise you which ones you could take. Um, and then just get into a house for almost
Yeah.
nothing. You know what I
And
mean?
I don't want to promise something, but I all the time go over with my clients with a list of all the transaction I close.
Mm-hmm.
And I will say in all of them,
Mm-hmm.
I got some seller's credit.
Mm-hmm.
There is mm, infinite possibilities of you can negotiate with the seller, and you can go into the right home. You do your own research of, okay, which homes are willing, or which seller will be more willing to negotiate. You know that there is other options that we can do in our end to help our clients. So
Mm-hmm.
sellers credits, regardless of the market we can negotiate.
Yep. So just know that the first step is calling a lender, getting yourself pre-approved because you're going to want to know what you're qualified for, whether or not you're ready. The next step you're going to want to take is making sure that when you're working with an agent, you go over, I guess, the realistic point of like realistic view of what you were pre-approved for and what that entails or what you're capable of buying with that. And then what tactics or what like plan you guys have in order to get into a home. You know what I mean?
Correct.
And then the next step after that is putting in offers, making sure you're reviewing everything we've talked about before, making the best offer for you.
Go over numbers, which is very
Mm-hmm.
important.
And then, just get into contract and everything should fall into place from there on as long as everybody did their due diligence beforehand.
Exactly. And it will take usually 30 to 35 days to close, and then you have your keys.
Usually 30 or 5 days.
And a lot of people think that closing a transaction will take a long time.
Mm-hmm.
And they are most of the people that I talk to, they are first time home buyers. They are in shock when I tell them it can take 30 to 35 days, sometimes even 3 weeks.
Mm-hmm.
And they're like, what? That quick? Yeah.
Yeah, it can be pretty quick as long as we went through the pre-approval process earlier, as long as everything moves a little bit smoother, as long as we're not using some crazy programs. But you also want to just make sure that you do not, you can, if this is the case, do not come to us saying, my lease is up next month.
Yeah, it happens a lot.
Yeah.
Okay, so oh, I will call you next year when a month before my lease is up, but
Hmm. Don't
that's
do
not
that.
enough time.
Don't do that. Try to do it at least 4 months before, 5 months before. And the reason you're going to do this is not because you're going to move forward quicker. It's
Hmm.
just you got to look for you got to get pre approved. You got to go over what you're going to want. You may not want to rush into a home too soon. Some property management people are asking you to renew your lease more in advance than normal, meaning you're going to feel a lot more pressure when you're going through this process. So let's minimize that.
Yeah.
And get started a little bit earlier.
Yeah, and let's make this process very pleasant for everybody, right? Especially for the buyers, because you don't want to get traumatized of the process, or if you don't want to have a bad experience.
Mm-hmm.
I think when you're relaxed and you have enough time to go through the process, is much easier.
Yep.
Everything.
Yep. Hey everyone, thank you guys for joining another episode of the Mortgage Fundamentals Podcast. If you guys found this information helpful and would like to support the channel, please go ahead and like, subscribe, and comment below. If you know anyone else looking for this information and could also find it helpful, please go ahead and share this page with them. I hope you guys have a wonderful day and hope to see you guys next time.